Okay, good evening, everyone. Welcome to another Wednesday night, Sequoia Lending. If this is the first time that you're on our platform, Sequoia, we are actually a business solution platform providing various different product and services to our business owner. And one of the main thing is that we provide quite a bit of business fundings for our clients, ranging from any commercial property loans such as fix and flips, multifamilies, retails, apartment buildings, all the way to working capitals or equipment loans, so on and so forth. So that is what we provide, and we are here to educate the public. How do you get access to funding? Not just only you, but how can you utilize the knowledge to benefit your community? Okay, so one thing that we realized that a lot of business owners have no idea where to get access to funding other than the bank. But quite frankly, when they walk down to the bank, 9 out of 10 business owners will not be able to get a loan from a local bank. And then especially in today's market, a lot of major banks are uh, not funding businesses anymore. They only pick the best out of the best to fund. So it turned out to be what we're seeing is that a lot of business owners that they used to be able to get funding through a local bank no longer able to do it, and they are looking for alternative funding sources like us. So again, that's what Sequoia commercial lending it's all about. Along the journey, we do a lot of business loans, as I mentioned, a lot of equipment loans, term loans, SBA loans. So we do have a lot of clients recently that keep asking us about how to get funding to expand their business, how to purchase in another business, so on and so forth. So those are perfect for SBA loans. But yet SBA do have their own guidelines, do have their own underwriting guidelines and regulations, so on and so forth. So tonight we have a power couple on our platform. They are mother and daughter team. We have been working with each other for quite a while, and I believe the first time that they came onto our platform was about a year and a half ago. And now they still funding quite a bit of deals for us. And I believe that next week they are funding one of restaurant purchase in. We have a clients that open restaurant in the airport, so we are funding that lady. Also, we have another deal that is already approved. Lou, you on the line, your client, the Cape May arcade business is approved by Stephanie right here. So hopefully we can get that one closed also, and we also have quite a few loans with Stephanie. Now, Stephanie, it's with Milestone Bank. She mainly focusing on bigger SBA loans, such as $350,000 and above. Now, we also have a lot of clients that doesn't need $350,000. Sometimes they only need 50,000, 60,000. And quite frankly, those type of loans are very difficult to find. It just not many lender out there are actually um, funding loans that is less than $350,000. But guess what? That's what the relationship is all about. Stephanie's daughter, Allie, it's in that business. She is funding anything anywhere from 50,000 up to $350,000. So she has two very powerful programs that she's going to share with us. One is called Lightning, the other one is called Flash. So again, without further ado, I would like to turn the floor to the power mother and daughter team right here. Stephanie and Ali, take the floor.
Hi, it's great to see everyone this evening. Do want to just go over briefly that the SBA program is for owner-occupied for-profit businesses that are, they can be using it as business expansion. They can be using it for, to buy real estate, working capital, equipment, lots of different things, refinance debt. There's many things, but SBA this week came up with new rules, which is why we're here, because we wanted to go through some of the changing rules that happened with SBA. So we're going to put on this slide real quick and share it with you. So what's going on right now is the SOP. Now, first of all, I want to let y'all know that I didn't come up with these points myself. It was like about a 2.5 hour meeting with the SBA. All the lenders got on. And this is a synopsis that was done by Starfield and Smith. We did add to it ourselves with a couple of items that we felt like they'd missed or hadn't fully clarified for us. But for the most part, this is Starfield and Smith's list of what happened. Now, Starfield and Smith is one of the largest lawyer firms, attorney firms for closing SBA loans. So they're used by many different lenders. So they're a powerhouse truly when it comes to the SBA regulations.
And this is only just like the updates and changes of everything. This isn't going to go over the whole SOP. So this is just the updates of what's changed
right
the past couple weeks.
So starting off with the first bullet point may not mean a lot to y'all, but requires that SBA lenders that are PLP, they have to use their PLP authority. They are not allowed to go GP. What does that mean to you as a broker? It means previously, as a preferred lender of the SBA, we were able to take ones that we felt were questionable, okay? Their eligibility was questionable. We would take it to the SBA and literally let them make the decision, make them make the approval. We are not allowed to do that anymore. We have to make it now ourselves. So I think in overall terms, you might see things that are questionable not get done as frequently. I just want to be, that's my opinion on it, but that's the rule. Do you have a different opinion on that?
But I think too, we'll find out a little faster because what they have done for us is they've given us lenders with PLP authority this own inbox to actual people at the SBA who have a lot of knowledge on the SOP, and they allow us to reach out to them with deal-specific questions about things. So we can reach out to them with questions that we have that if we think that maybe something is kind of on the borderline, they would be able to give us their opinion on it and align to it. So
that's actually a great part,
which is a good part about it, because before we used to have to ask SBA 7(a) questions, and every lender had access to that. So it would take a while to hear back, and it was also not as knowledgeable of team. But now
they were vague in their answers.
Yeah, and now people with this other email address now for the banks and lenders that have the PLP authority, we have a specific email address that we can use, which is going to be a more helpful, I think. So there's definitely pros for it.
Yeah. Okay. So the next item is actually a big one. Okay. It is restoring the requirement for 10% minimum cash injections for startup loans and business acquisitions. Previously, we had been able to, like Cape May, okay, take that as an example, right? The gentleman had been a manager at a facility, and the seller and the owner was selling it, wanted to sell it to that gentleman because he'd been the one running it for him. So in those instances, we were previously allowed to drop down the equity injection down to 2.5%. We are not allowed to do that anymore as of June 1st. These rules go in effect June 1, but you have to have gotten your approval prior to June 1. So in Cape May's case, what we're doing real quick is getting the approval and then closing it when it's ready to close, right? When they're ready to close. So that's one of those really big moments.
They can still do 50% of the equity injection.
Right. Now that's one of the
seller can still hold half of the 10%, but not the case that she just said.
Not 7.5%.
Mm-hmm.
Yeah, it's now down to 50% they can hold. Correct?
Yes, they can hold 5% of the 10%.
Yeah.
And then also, like we at Colony Bank, we used to have a special thing for doctors, medical professionals, CPAs, attorneys, and lawyers. For startups, if they could show that they had a following and they had been working in the industry for 2 years, we would do those startups with 0% down. Well, now, unfortunately, effective June 1st, we have to make those startups get 10% down. So it changes a little bit, but I know our grid policy, most startups, we still require 10% anyways. It was just those few industries that we had opened it up, but other lenders, maybe they were a little looser, which now they have to go by these rules.
Okay, so the third point is that MCA loans and factoring loans are no longer eligible for refinance. That's huge because we often have people coming to us with MCAs wanting to refinance them, and we could on a 10-year basis. We cannot anymore. So I just need to let y'all know that if by chance you have one that you were looking at get refinanced, Not my institution, because we're booked, right? We're full right now, but I'm sure Alan has several other SBA lenders that may not be full, but you need to get those in quick. If you were thinking about refinancing an MCA loan, like you got to do it really quick before June 1st.
Next, I didn't run into that a lot. Disallowing multi-step partial changes of ownership. Our bank never did that because it was too complicated and we didn't like it anyways.
But we did. We did allow the multi-steps, but we're not doing, we can't anymore. They're not allowing multi-step partial change of ownership. So what they were doing previously was like trying to, they'd only buy a portion of the business and then add on other portions later. Can't do that anymore. You've got to be buying what you're buying with the SBA loan now. What's the next one?
Clarifying the criteria of evaluating the eligibility of a business operating under a management agreement. So if there's certain management agreements in place, then we have to make sure that there's certain SBA SOP regulations that we have to abide by. So just basically, if you're working with a borrower that also operates with a management agreement, we need to look into the specifics of what the SBA SOP requires.
Yeah.
So if you have any deal specifics that are like that, just make sure you let the lender know that you're working with so they can make sure it goes with the SBA. And then the other one is clarifying the criteria for a business that is lease space, such as shopping centers, office suites, salons, ghost kitchens, and similar business models. So if you run into those, let us know as well. They have a very thin gray line on what is eligible or not. I don't know all of it off the top of my head, but I can tell you it's things like the type of agreements that they have with the people, with their tenants, technically has to be a certain type of agreement. They can't, I know one of them is like, they can't go in and that's be their set space. So they have to be able to go in and be able to work with any of the spaces that you give them. So let's say it's like a hair salon. The person who has the hair salon can't say, okay, well, this booth to the right, the first chair to the right when I first walk in is always my chair. Technically, it's not allowed to be that way. They don't have assigned spaces. So that's like one of the regulations too. There's, I think, 4 or 5 criterias that all have to be met in order for those type of businesses to be eligible. So if you run into those scenarios, just to let the SBA representative that you're working with know right away, and they can ask those specific questions and you can find out, is this one actually eligible or not? Does it meet the criteria? Because there is a really thin gray line on those. Clarifying the loan applicants with an existing delinquent SBA loan are not eligible for approval of additional financing.
Well, I mean, that's actually always been the rule, but they literally have made it like, we're making it clear now. If you're delinquent on an SBA loan, like you have an EDIL or you had a PPP and then went into payments and you're delinquent, it's not happening. You're not getting another SBA loan.
You can go further into this one if you want to.
Oh, okay.
The LPRs.
Oh, okay. So, okay. So further clarification regarding people that are non-citizens. Okay. So legal permanent residents are eligible, but any other type of ownership other than a citizen or an LPR is no longer eligible. I actually had a guy this week that was an LPR. We sent it in for approval because they do a check on those people. And it turned out his LPR status was conditional for only 2 years, which we could not see from his paperwork, but they could tell. If it's not a full life LPR, it is not eligible. So that's actually incredibly interesting because previously, if you were, you had ownership any amount now, any amount. So like, let's say you owned 99% of the company and 1% was owned by an individual who is not a green card holder or a citizen, we can't do the loan anymore.
Previously, it was 51% had to be owned by a U.S. citizen or legal permanent resident, and now they've changed that to being 100%.
100%.
The next one is reinstating the franchise directory. So that was something that was already occurred in the past. If you actually Google SBA franchise directory, it's still up there. They didn't get rid of it. So you'll be able to see the same ones. So the SBA is giving the franchises that have been listed on it a certain date to re-register with them, and other new franchises, a certain date and when they have to get onto the list. Throughout the process, after these dates, a franchise can always get added to the franchise directory. They have to just reach out to the SBA. I don't know that email off the top of my head, but if you ever have a franchise who's trying to get approved on the franchise directory, email me and I can find it for you. I have it somewhere in my notes. And they just basically have to give them, they email the franchise SBA.com or what, it's something like that, and they give you a list of a couple things they need from the franchise to evaluate if they'll approve it or not. But we did list the dates for you on here in case you are working with some franchises to make sure that they are communicating with the SBA and trying to get onto the directory again. If the franchise is not listed on if we're working on a loan with a franchise that's not listed on the directory, we can't. It has to be listed on the franchise directory in order for us to do it. Also on the franchise directory, there is a few like non-franchises. Technically, they technically don't meet the legal definition of a franchise, but they are like similar to it. I can't remember exactly what those businesses are, but they're listed on there as well, and they have like certain type of like management or some type of agreements. They'll be listed on as well. It's just there's a certain paperwork isn't required for them or something like that. So you will find some non-franchises on there that are still on the directory. Let's see what's next.
Oh,
lenders are okay.
We have to now make sure that all of the owners, 20% or more, any owner that's got a 20% more or stake, we have to look at credit available elsewhere now. We did not have to do that as hard before, but now they are getting a little more sticky. So if you've got a really strong borrower, Alan, take your gentleman in Chicago, how he was a very stout person, great personal net worth. He may, under the new rules, be not eligible for SBA financing because he has so many assets and so much of availability to liquidate his assets. So it's made it a little more sticky. Like you have to make sure these people are not almost too good, which is terrible for us lenders, right? But it's just the new rules. So the the next one is removal of the ability to provide a substitute guarantor in place of a required guarantor. So in all honesty, most lenders never did that anyway. I had never run into it. So I don't think your bank allowed that either. So yeah, that was a very obscure rule.
Oh, which was allowing them to give them stamp tax?
No, the substitute guarantor.
Yeah. Okay. Yeah. No, we didn't.
Yeah. But the next one is
reinstating the tax transcript verification requirement for all loans. So previously, some lenders would allow stamped tax returns, and they could accept those because for some reason the IRS was taking a little bit to have received them and update their system. But now all lenders have to, effective June 1st, do the tax transcript verification requirements, I believe.
Yes, that's correct.
Reinstating hazard insurance requirement for all loans over $50,000. So basically what that means is that any loan over $50,000, we're requiring the borrower to carry hazard insurance. I think our bank already did that.
Yeah, we did that as well.
And stuff like that. Reinstated minimum life insurance requirements.
There was a lot of lenders that didn't have minimum requirements for life insurance, okay? Now they're going back to if your loan is under collateralized, you have to get life insurance for the amount that it's under collateralized. Previously, it depended on the lender as to how much life insurance was required. Now it's much more cut and dry. You're not going to be able to shop that with lenders, right?
But there is still the caveat that if the lender determins the principal is uninsurable, it must obtain written documentation from the licensed insurer supporting that documentation. So if, like, for some reason this person is not insurable due to maybe their occupation or due to, like, they have
or health conditions
or their age or something like that, you just have to get some quotes from a couple different insurance providers and letting them know that they can't get insurance, and then document. We just have to do that and document the file.
Oh, this one's a fun one. So it is requiring sellers in a partial change of ownership to provide a limited guarantee of the loan for 2 years after disbursement, regardless of how much ownership is maintained. And let me explain that. If previously you had a change of ownership, like take Cape May, where the gentleman was buying, he was the manager, but he only wanted to buy a portion of the ownership, right? He didn't want to buy the whole thing. You could have done that as long as the seller was under 20%. He didn't have to guarantee loan. Now, if it doesn't matter what the seller's maintaining. If he's staying on as an owner, he has to guarantee the loan for a minimum of 2 years. So yeah, that's a pretty big deal. Like that changes a lot for business acquisitions.
The next one is clarifying that seller debt may only count as equity injection if it's on full standby term for the life loan and doesn't exceed 50%. So we were saying earlier about the 50%, but also now what they're requiring is that seller held debt has to be on full standby for the entire life of the loan if it's used as any part of the equity injection. So if you're doing a business acquisition and the borrower's bringing in 10% and the seller's just holding an additional 5%, that doesn't matter. That doesn't have to be on full standby for the life loan because the borrower's bringing in their own 10%. But if the borrower is doing, okay, I'm bringing in 5%, the seller's bringing in the other 5%, that 5% seller held note has to stay on standby for the life of the loan. That means they're not allowed to accept any payments for the whole life of the loan, which is typically 10 years, or until they pay us off. So that's a huge thing because previously we were allowed to. I did a lot of business acquisitions where the seller would hold part of the equity injection, and as long as, like, depending on their industry experience and things like that, sometimes we would only require it to be on standby for only 2 years instead of the whole 10. Well, now we don't have that luxury of allowing them to do that. If it's any part of the 10% required equity injection, it has to be on full standby for the whole term of the loan.
Some of the next few are really just for lenders. The 1050 and the 601 are forms that we take care of internally. But the last one is there are going to be new certifications at closing that the borrowers are going to have to sign. And some of those, like the old ones, included that you would try to buy American-made products as opposed to imported products. But there's going to be more saying that you're going to try to hire citizens and not hire non-citizens as much, and stuff like that is what we've been told. I haven't actually seen any of these docs. Okay, so I cannot opine totally as to what this closing certifications are going to be. We haven't seen them from SBA yet. So as soon as we get them, we'll let you know. Now, the last couple items are literally changes to just the small loan program.
Sorry, I felt like I was about to sneeze. Okay, went away. Okay, so the main changes for the smaller loan program, and now this is not SBA Express. Okay, SBA Express is completely different. I don't do SBA Express, so I'm not going to talk about it. And there wasn't any changes to it anyways. But there was a smaller balance. The other ones were called standard 7A loans, and then there was smaller balance. It used to be any loans going from all the way up to 500,000. Well, effective June 1st, they're increasing the minimum or decreasing the minimum to being 350,000.
Decreasing the maximum.
So decreasing the maximum to 350,000. So now a small loan can only go up to 350,000. Anything above 350,000 has to go and follow all of the normal standard 7A SBA SOP regulations. Then the other difference is the score. So the minimum SBA SBSS score. So what an SBA SBSS score is, the SBA requires us lenders for any loans that are the smaller balance loans to submit the deals for SBA SBSS scoring, which is essentially a business credit score. It's primarily driven off of any 20% or owners more credit score.
Correct.
But it's also driven off of any business history or credit that they have. Just a lot of businesses don't have any credit, so then it's mainly driven off their personal owner score. That used to be 155. It's going up 10 points all the way to 165. So that's pretty big. I do a lot of loans that fall in between 155 and 65 right now. And just, unfortunately, after June 1st, those ones wouldn't have been eligible.
From what I understand, and please don't hold me to this, and certainly not her because she's not saying it, but from what I understand, it's almost equating to like a 750 credit score.
It was 700.
700? Okay, that's better. I thought it was 750. I thought that was really high.
Yeah, it's equating to almost like a 700 credit score, which is still pretty high considering our minimum is 675,
Right.
So then to meet this SBSS, unless they got some good business credit.
Unless they
that's
got
just what we've
business
heard.
credit.
Honestly, we don't know anything. Whenever I submit a deal into SBSS scoring, we just shoot the information that they want, like the business's EIN, the names of the owners, the business names, and then it shoots a score back at us. Like, it doesn't tell us what what affected their score. Like when you look at a credit report, you can see, okay, too many inquiries, proportion of high balances. You can kind of understand why you got the score. You don't get anything like that with the SBSs. They just pop a number at you. So we really aren't 100% what goes in that. At a minimum, the lender must take a first lien on the assets being financed with the loan proceeds. We already, on our small balance loans, did that, and we already do take a blanket UCC lien, so that's really not going to be changed with us. We already were kind of doing that. Some lenders weren't, though. This one, however, is these sub-bullet points are huge. So now when 50% or more of the loan proceeds are being used for working capital of a small loan program, lenders must take a lien on all the applicant's business fixed assets, including real estate, up to the point where the loan is fully secured, and the same standard valuations that 7A uses. And then if business vehicles are less than 10,000 at the time the SBA loan is assigned, then we don't have to take them. So what this means is previously on all of our flash and lightning deals that we were doing, we only took a best blanket UCC lien on our assets, on the best available UCC lien on the business assets. Now, unfortunately, the SBA is requiring us to not only take that, but we have to take all available collateral until we're fully secured. So if a business owns commercial real estate, even if there's any equity available in it, we have to take it until our loan's fully secured. We have to take individual liens on every single vehicle that's valued $10,000 or more. Even if there's already a lien in front of it, we got to take another one behind it. So it's going to significantly impact our small loan programs that we do at Colony Bank. Just to give y'all a little update on what they are in case you don't know, and in case you didn't know about them and want to try to get some in quick before these changes happen. We have three small loan programs at Colony Bank. The main two working capital ones are called Flash and Lightning, as Alan said. Flash currently goes from $50,000 to $150,000, and Lightning goes from $150,000 to $350,000. Those programs do have some credit knockouts, which is there's certain industry restrictions. Credit has to be 675 or higher. SBSS is 155. Lumos has to be 80 or higher. They can't have any past due taxes or tax liabilities. No more than one bankruptcy, and the bankruptcy has to be 10 years or older. No felonies, misdemeanors are okay as long as they can show that they've rehabilitated themselves. They also have to have a positive personal net worth. So basically, when they fill out a personal financial statement form, they have to have more assets than liabilities. Those are the immediate knockouts. Now, how much they can qualify for, Lightning is based on 33% of the last tax return's gross sales revenues. So if you have a business that has made sales over $150,000, then they could qualify for at least a $50,000 flash loan. Also, sorry, the net income has to be at least a zero. Okay, so it can't be a negative net income. It has to be at least zero or higher. Can't be negative. And then we would determine what dollar amount they can get based off of their sales. It's 33% of that. Those loans close in 10 days. They're very quick access to working capital. Lightning, since it's a larger dollar amount, it's a little bit different. You can't have a negative net income because it's EBITDAs. We do interest, we do some add backs. It has to be a business debt service coverage of 1.20 and a global debt service coverage of 1.10. You can reach out to me and I can give you more details on all of them. I'm just kind of trying to do something, quick overview of them. And Lightning does take about 14 to 20 days. Now, if you have any of these possibilities, get them into us as soon as possible because we need to pull this our SBA authorization before June 1st. Because what's going to happen is we're going to completely change these programs. I don't know what we're going to do yet. We haven't. Our management is still trying to wrap our head around what we're going to do. Because now, imagine if we have to take a bunch of liens on business assets and every single car and every single vehicle. There's no way we could do a program in 10 days or 14 days. So don't hold me to it. I don't know what we're going to do, but there's been talks about thinking, okay, well, we're just going to say if a business owner owns any commercial real estate or owns any vehicles, they can't apply to Flash and Lightning, which that cuts out a bunch of people. So if you have businesses that want to apply for these loans, that they also own some vehicles and they also own commercial real estate, we definitely need to get these in process before June 1st, because that's going to completely change. As soon as we know what changes we are going to make to those programs, we'll reach out to you and let you know, so you can share with your team, because like I said, nothing's set in stone. We don't know. We're trying to figure out what we're going to do, but they are going to be impacted. We're still going to have them available. It's just not going to be as available to as many people, because we're going to have to make some changes to it. And then Thrive is our other program that's kind of like what Stephanie does, but it's just smaller balance. It's your regular SBA 7A loan that does mixed uses. It's just 150,000 to 500,000. That's obviously going to change, because the minimum amount is now going to be 350. To be honest, I don't know if we're going to keep the Thrive product anymore, because it's a lot of work for our bank to have to do loans 150 to 350,000 that are full underwriting, that we have to engage an attorney, we have to engage our underwriters, and it slows down our larger loan pipeline. So we're trying to assess the cost and how the return that we get on those, to find out if we're still going to even offer that program or not. So if you have any of those, I'd say get them to me too, especially if you're trying to refinance any merchant cash advances, because as we said earlier, those are no longer going to be eligible. So that's kind of the programs that we offer, and how they're going to be impacted by the new SBA changes. And then we just kind of put here, all of these are going to be effective immediately June 1st. Now, again, reminder, the loan doesn't have to close by June 1st. We have to have our SBA authorization before June 1st.
So we have to have it approved first.
Yes. So it has to be through
Underwriting.
requalification, through underwriting, and about into closing, like right into closing, the beginning of it. So we can submit it to, and there's certain docs that have to be signed by the borrower before we can submit it.
Yeah, there are. So that's our quick presentation. I hope that was helpful. Does anyone have any questions? I mean, it's going to take a while to digest this. It took us the last 2 weeks to digest it. So.
Well, really appreciate the insight of what's behind the scenes. So this is what I call under the hood, right? So we understand there's a lot of things going on, but on our side, we have no idea. I honestly, from my perspective, whatever you just shared with me, to me, it's the same anyway, because we didn't know what was it before. We didn't know, how the change, the impact is going to impact us. So from our perspective, we would just keep going out there generating the deals. But I think out of all these requirements, whether it's the numbers, the size, I think the biggest one for me is the citizenship. My understanding is that it used to be able to do a loan as long as there's one principal is a U.S. citizen and the rest are not. But now it looks like everybody in the company has to be either green card and a citizen. Am I correct saying that?
That is correct.
Yes.
Okay, so I think that would definitely impact
That
a
is
lot
a
of
big impact.
It's huge. Yeah.
a lot of business owners in our community, especially the foreign nationals or the immigrants. Many of
Yes.
us in our it's not green card yet. So I think there's no way to get around it, right? I mean, in today's
No,
market.
there's
Now, one thing I'm going to ask, because it used to be like this, and I don't know, is it, we only look at ownership, we don't look at profit sharing agreements.
correct.
Right?
So
So we only look at
that's
ownership,
kind of sneaky, by the way,
not
but-
profit sharing agreements, which could be like some, I guess, way around it. So I guess I don't want to go too far into it.
I don't want
Okay,
we don't
okay.
want to lose the witness. We'll get in trouble.
But just we look at ownership, not profit sharing agreements.
Okay. Well, that definitely can help us to somehow to explain what that means when we have the deal. But again, I think to us that is the biggest thing. Um, I mean, again, everybody, if you have any questions whatsoever, feel free to raise your hand, feel free to ask, or feel free to type in your question in the check box, and we will try to answer as much as possible. So let's get back to the SBA. So a lot of people will come to us asking for SBA, which we pretty much we talk on a daily basis, Stephanie and Ali. But I want the team to hear from you guys also. Obviously, from the SBA's point of view, you are looking for somebody that who has the experience. Now, define to us what experience means. A lot of people, for example, like yesterday, a lady came to us saying that, hey, I have been driving, I've been owning a trucking company for 30 years, and now I want to purchase a bakery business. So again, share with us what you were seeing on something like this.
Well, every bank has a little bit different of views on that, but I'll be honest with you, the majority of us all kind of go with, if you have owned another business, and especially if it's in the same, like in a service industry, okay, or in the same realm, we'll all go, oh, that person has experience, right? If you've been a manager of an owner of a business, it's fairly common for us to say that's similar. But if you're, let's, what is it? The most specific type of business is a restaurant, right? That's the one that fails the most, right? So it does. It has the number one failing. It's the highest failure rate is the restaurants. Now, if you take them for themselves and you go, well, I've been in a kitchen and I've been a cook for 20 years, so I can run a restaurant. No, that doesn't work. Actually, it's almost better for the trucking woman that you were just discussing to want to buy a restaurant because she knows how to manage people. She doesn't know how to cook, but she knows how to manage people, right? And get people there and showing up and working. That's what's important in the way we look at management experience. How about your bank?
Yeah, we look at ownership experience, like any previous ownership experience, or direct or transferable experience. So,
Yeah.
So if they've had ownership, it helps. But let's just say you've had the same scenario, but the person doesn't own a trucking business; she's just been working in a trucking business. That's not direct or transferable experience to a bakery. But the ownership trumps that. So we do, any type of other ownership or direct or transferable experience. And transferable, we can try to stretch, we can get pretty good, but what we have to do with those is really honestly get the borrower to talk a lot about themselves, because sometimes on resumes it just looks like, it doesn't look that it's black and white, and we'll have to get them to elaborate a little bit more. Okay, well, what at this job makes you feel like you could do this and that's transferable to this? And then once they get thinking, they can help us explain to where we can make that case to our underwriting team.
So to be honest with you, the best thing that you can do for us is get them to be verbose in their resume. I know that sounds crazy, but people like to be real bullet point on their resume. We need them to be more granular. We need them go above, and go, well, in college I worked my whole life in restaurants, right? I was even a shift manager. But you have to tell us that. We're not going to be able to tell that from your resume, because you're going to have put that down so far, because it's got nothing to do with maybe being an engineer, right? And so you're not telling us all the other experience that you have. So have them be verbose. I asked for either a bio or a resume, okay, at the beginning. And I think bios are almost better most of the time, because they'll go into, and I was the youth pastor at my church and I did this. You know what I'm saying? It's helpful when we get, especially if they were trying to do a kindergarten or something, or a preschool, and they are youth pastor at their church. You've got to get them to tell us why they're passionate about that industry. They usually have a reason to be passionate. They usually have a story behind there that we don't have a clue of. You've got to get them to be verbose and give us that information. That's the heart. That's your key. The more information you get, and you really, to be completely honest with you, if you get to know the borrower and really understand their total goal, right? Not because they'll come to you saying, hey, I want to buy some equipment, right? Okay, well, why do you need the equipment, right? Oh, well, I'm starting up this second line of my business. Okay, well, what more are you going to need? You might need working capital with that. You might need to do some improvements to the leasehold property. If you get them engaged and you get to know what their end goal is, you can also usually build the loan more to help them, and it makes the loan bigger for you. So it's not just selfish reasons. You're also doing it to get them from point A to point B, where their end goal is. And I think that's where you guys are so valuable to us, right? Instead of a borrower coming off the street, when you guys get to sit down and really get to know your client, even if it's just like this on Zoom, I think that's the best thing that a broker can do. And I think it's the most important part of letting us be able to then tell you if it's eligible. Does that make sense?
Yeah, and I think bios help a lot more too, because what happened is basically people have narrowed down resumes, and they have this thing in their head that resumes have to be one page, because
Right.
when they go to apply for a job, they have to just put what's most applicable, only their most recent jobs, and it must fit on one page, and it must be tiny, because if it's too distracting, they're not going to get the job. No one's going to read a 3-page resume. Actually, we like more detail. We don't need to know what your cat's name is or anything like that, but the more details, the better for us. So I think that's where the bio comes in to help too, or to help supplement it as well.
That is absolutely amazing tips right here. I have been telling clients that, hey, when you talk to a lender, you actually need to brag about yourself, because the lender is going to be thinking about, why in the world am I going to give you $1 million, $2 million, $3 million? I don't even know who you are. So it's very important for us to educate our client. When you submit documentations to us, it is very important to brag as much as possible, not only just on the bio, but also on the PFS, for the personal financial statement. Because to a lot of people, when they put their PFS, I mean, they would just fill out 2 lines. How much money do you have? I have $1,000 in my bank. That's it. I mean, again, nobody is going to give you $1 million. When they look at your PFS, you only have $1,000 cash, right? So that is the time, but that is why it's very, very important for us as a loan consultant. When the clients submit documentations to us, please look at what they look what they see. Now, we have two lender, two bankers right here sitting in front of you. But you always put yourself as the lender. Imagine that you are the one that writing $1 million check. When you look at that PFS, when you look at that resume, do you feel comfortable to write $1 million check for that particular person? If you don't, then obviously these two ladies are not going to write anything. So again, that is what we are doing right here. The processing team, when you submit documentations to us, we will review it first, and we will tell you what we need. Now, quite frankly, it's not what we need. Now you know it's these two ladies. They are the one that needing something like this. Now, quite frankly, they are not the one that who needs it. It's their underwriter who needs it. So again, it's very, very important. So now, SBA is not the same for everybody. So as you can see, different bank have their own ways to look at the loan, look at a deal. And again, they mentioned about a bio. This now, a lot of people saying, I don't know how to write a bio. Guys, use ChatGPT. That is where you would, I mean, again, if you don't know how to brag about yourself, or if you don't know how to brag about the client, use ChatGPT. Punch in some bullet point, man, they can write you pages after pages after pages of bio. So again, utilize all those tools. Now, AI definitely is going to be here. Utilize AI to help yourself, and also utilize AI to help your client. Just like 10, 20, 30 years ago, when the web page came out, what is the worst web page? But today, everybody need to have a web page. So same thing with AI. So talk to your client, talk to your 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 business owners that, hey, you need $1 million. It doesn't matter if it's $1 million loan or $100,000 loan. You need to put something beautiful for the lenders to consider. So again, now you can hear there are two different lenders. Ali is with Colonial Bank, and Stephanie is with Milestone Bank. There are two different banks. They all both of them do does SBA, but as you can see, they look at the client differently, right? So um I don't see any questions right here, but in that case, we still have a few more minutes. So let me continue to ask questions. So we do have client um that come to us saying that, hey, I am purchasing a business. However, the operator, the current operating team will stay to operate a business. So even though I don't have the experience, but they know how to run a business. So ladies, how do you see something like this? Because this comes up all the time.
In all honesty, that truly depends on then the owner itself. So, but it's, let's just say it was back to your trucking lady, okay? So she doesn't have experience in that industry, so she's really going to rely heavily on the management in place. We're going to want to see management agreements with the head of the management, okay? If they're crucial, okay? If they're not crucial, we're just happy that they're going to stay. We want to have made sure that that the seller has vetted the fact that they're going to stay when they leave, and they're not going to just run away. But if they're a crucial piece, we're going to want to see a management agreement in place, to be honest with you. What about your bank?
Same thing. It also it depends on the industry.
True.
So that's the way we can decide like, okay, is those people's roles easily findable? Like, is there a lot of people applying for those jobs out there? It's not hard to find a replacement. It depends on the uniqueness, I guess, of their team. So the industry that they're in, a restaurant's easier to find waiters and waitresses and kitchen people than, let's say, people with master plumber's license to be able to be a plumber or something.
True.
So it really depends on the industry. It also depends on sometimes the franchise too. So sometimes if a business is a franchise, the franchise has certain things to where like they will help you find employees like right away. They can help you have a replacement in one day. So then that kind of can trump some of the industry things that we have issues with because, okay, yeah, it's this industry, but they have a franchise who can help them find these employees. And even if they can't find it, they'll bring somebody over from their franchise down to help work until they can find employees. So they know that they won't fail. But typically, yeah, we would require them to have any other scenario, we might want them to have a management agreement if it's something that's extremely important to the business and that it would be maybe a little bit more difficult to find a replacement.
Like you said, a plumber.
Yeah.
They have to have or a contractor or like a roofer in Florida. You got to make sure they've got that roofing license to do roofs in Florida. You got to have that contractor's license. So
and typically we require those people, like if there's certain licenses that have to be required and held for a business to operate and our owner is not going to maintain those licenses, we typically require whatever employee is going to then guarantee the loan, which then they probably sometimes want ownership, but not always, but sometimes it really depends. It's for people like that master plumbing license. I don't know about you, but for us, we won't let someone open up a plumbing business if they don't have that license themselves, because if that person decides to not show up, then they can't operate. And it's easy to find people underneath them to do the plumber job, but somebody has to still hold that license. So that's kind of typically, if it's real strict, then we want them to even be on the loan. But honestly, we don't run into it too much.
You don't really run into it as much. But like take the master plumbing with the assisted living facility. You have to have a director.
Yeah.
Right? You can't go one day without a director at an assisted living facility. I mean, you're going to have to remove all of the residents, right? You have to have a director. And I think that's like the same scenario where if the owner is not going to have that experience, we're going to want a management contract in place. Mm-hmm.
So there's few industries that we run into it, but not too many, because most of them, typically they can find a replacement quickly. But there's a few select industries that we would require a management agreement on.
Okay, great. Wonderful. We do have a question. Margaret, I saw the hand is raised. Please.
Quick question. I have a business owner. The company is operate under LLC and is the residency is permanent green card holder. His credit score is around 760. He's looking for some type of business, either working capital or some type of equipment loan. I look at the tax record. The company gross is 1.1 million, but the expense for the selling the goods, he put down 1 million, which is like a $100,000 in what take away all the in his personal tax return is only net like 35,000. And is this any possibility to get any type of loan?
That would be a perfect flash loan. They could most likely qualify up to $150,000. As long as the net income, like you said, is over $0, it has to be $0 or more. What you said, you think it's about 30. Then that would be fine. You said his sales are $1 million, so they'll definitely qualify. That's 33% of that is way more than 150,000. So that could, I would say, submit that. Get with Alan on how to submit that into our Spark portal for a flash loan. You said their credit score is good. Just make sure that they don't have any outstanding tax liabilities, because that is one of the knockouts. And then also, what industry is it, if you don't mind me asking? And I can check to see if it's eligible.
Auto accessory.
Oh, auto accessories. Okay, cool.
I'm pretty sure that's
automobile. automobile accessory.
Okay, I'm pretty sure that's eligible. I can just double check real quick. But that's a perfect flash loan. Your question made me randomly think of this. If the scenario was different, they had good net income and they wanted a larger loan, just a heads up for our bank, any equipment purchase, we require a 10% equity injection on. I don't think y'all do, but
we
10%.
don't, but it depends on whether or not they're expanding their business with it, because that's part of the new rules, right?
Mhm.
So if they're expanding their business by adding on new equipment to add, to make more revenue, or let's just say in your instance, right, it could be that they're renting equipment, which is why their expenses are so high, their cost of goods sold are so high, and they want to replace that rent that they've been renting that equipment with purchasing the equipment. You might have a ability to go even a higher loan. It honestly depends on what they're trying to do with the money. If they're just trying to do working capital, your best bet is her flash program.
And it's 10 days, so it's the fastest too. So what you would say is even if they want to purchase equipment, they can always use working capital to use the working capital towards their normal business operating expenses, and then what their revenue is that they would normally use to pay those operating business expenses, it frees up that cash flow for them to go purchase the equipment.
So how many years of tax return you are looking for? 2 years or 3 years?
They have to be in business for at least 2 years or more based on entity formation date, but we only want their last year of tax return.
Oh, great. Thank you.
And you said they're an auto parts?
Auto accessory.
Accessory.
I'm trying to Google what that code would be because it didn't pop up.
So while Ali, it's looking at the quote. For everyone, if you need to submit a scenario, please go to your website. There's something called working capital. So when you put in working capital, we ask you a few questions. What is the loan amount that you're asking for? So if you put in 50,000, then we know it's going to be a lightning, or if you put in the dollar amount, then we know which one where to submit it to. So again, all you need to do just to go to your portal to fill in the application for us.
Well, for this one, because not sure which one would be best suit for this scenario, is working capital or put it in under the equipment loan?
It depends on how much they want to borrow.
Yeah.
Right. How much are they looking for?
Are they looking for like a $350,000 in equipment, or are they just looking for $150,000 in equipment? Because if you're going to 150, then it's easier to get her working capital loan, right, than anything else.
Okay, thank you.
Yep.
Yeah, and then also, what's the sorry, can't find my words. How fast do they need it is what I'm trying to basically say. What's their urgency? Because like I said, Flash can close in about 10 days and Lightning is like 14 to 20 days. But Flash is like that quickest one. So like if somebody needs it quickly, that's also sometimes the better option. The closing costs on those are typically low, but the interest rate is Wall Street Journal Prime +3.
Yeah, but that's typical SBA though.
Mm-hmm.
Prime plus 2.75 to 3 is normal.
So.
And what's the point fee?
Like what we pay y'all?
Yeah.
No, there's no points. There's no points on this. So
yeah.
Yep, there's no points fee on this.
Thank you.
Mm-hmm.
Yep.
I just say I don't know.
Okay. So again, well, thank you so much, Stephanie and Ali. Great information right here. So I do have a copy of what they show. So we're going to upload it to our back office. You can download it from there. But guys, don't get overwhelmed. I know there's a lot of information, a lot of technical stuff right here. We just want you to know, just give you a little peek what is under the hood. And also just let you know, you're not just listening to Alan Wu. We actually have lender right here that can tell you how they look at a particular deal. And we work with them on a day-to-day basis, either myself or Georges or Becky, whoever that might be. So again, you are in good hand. All you needed to do is just to let people know that, hey, there's a lot of money out there. If they need funding, put it onto our platform. We will get this thing. We will get it done for them. Right. So any questions that you might have, feel free to send an email to us. We will do the best we can to answer your questions. If you have a scenario, you know how to contact us. The best thing to do is to put in a scenario form. Once we look at the numbers, we look at the scenario, then we have a pretty much idea of how to get this deal done. And if we don't, we will get you or your client on the line, or even in some cases, we might get Stephanie or Ali on the lines to talk to your client. But again, we are here to help you to get deals closed. So without further ado, well, thank you so much for, well, it looks like there's somebody right here have another question right here. Are the changes due to the new administration in place or just happening to be changed, not regarding rehab? Well, again, probably changes change. The lender change guideline all the time. You know,
I do believe it's from the new administration.
right. So for SBA, it's the new administration, but for other loan, for like for example, like rehabs or DSCR loans, they're all based on the economy too. So we see quite a bit of change in our line of business, pretty much on a regular basis. You see lender, especially on the private lending side, you see lender come, you see lender go. Some lender just cannot support it. So there's a lot of things going on. So again, that's a good thing with us being a broker. We have so many different lenders that we deal with, and we can, if one lender cannot get it done, we look for the next one. Okay. Okay, well, thank you so much. Definitely looking forward for the closing next week. And Ali, also, we have a few more deals submitting to your way, and looking forward to close some deals for you guys, with you guys as well.
Yeah, thank you so much for having us on.
Thank you so much. We truly appreciate it. And we hope you guys have a lovely evening.
Absolutely. Good night, everyone.
Good night, everyone.
Good night.
Yep.